What's going on, y'all? Hope all is well. Another episode of Combos with your CFP Mario Payne in beautiful Atlanta, Georgia. We're downtown at the Hyatt for InvestFest 2023. We wanted to kind of quickly talk about something as investors we might want to look into because lending is going down. So we have individuals who do stock market, who do real estate, but from a lending standpoint, individuals who are looking to get capital, looking to get lending for your business or for a real estate deal, want to look into the horizon because some companies are not lending like they used to, and some companies, large companies, are actually going bankrupt because the money that they got from their cash daddy is not coming down anymore. Before we get started though, like, subscribe, share to our channel. Check out my book, The Relaxed Investor, #1 Amazon bestseller. Been out for a week, just extremely happy. Thank you for all my profiteers for getting the book. I really, really appreciate it. The Relaxed Investor. Just Google Relaxed Investor on Amazon or go to our website, relaxedinvestor.com. But let's talk about lending. This is directly from Yahoo Finance. KKR's latest bankruptcy deal is a bad omen for lenders. Uh-oh. Look at this. The bankruptcy of Genesis Care, a cancer treatment specialist backed by private equity powerhouse KKR. So again, private equity, real estate deals. Lending companies use private equity to help funnel the money. Large corporations use private equity to continue the growth and scale. And China Resources Pharmaceutical Group. Now China's starting to go through a depression right now. So I have recommended clients to stay away from Chinese investments because right now might not want to play with it. Now 6 months, a year from now, as their depression slows down and their market goes back up, might be a good investment, but right now might want to stay away. In my humble opinion as a certified financial planner, of course. The latest cautionary tale of how much value is being destroyed when companies go bust. In previous default cycles, leveraged loan providers would expect to get 70 to 80% of their cash back from falling companies, right? Invest in the company, even if it goes down, they might get 70 to 80% back. So they lose, but they only lose 20%. Compared to us, if we invest in a stock in the stock market, it goes down by 80%, we lose 80%. That's how the rich get richer. The words of Don King, only in America, in this way, bad though. Those days are over. Some Genesis Care investors are bracing for a mid-teen percentage, according to people familiar with the matter who aren't authorized to speak publicly. I ain't speaking, I tell you off the record. A new blow to the lending market headed for record recoveries. Look at here, profiteers, right? Since 2014, recoveries of busted leveraged loans. So these are large companies loaning to smaller companies that issue out loans for businesses and for real estate. The lending market is headed for a record low recovery this year, up 80% 2014, meaning that if I lend money, even if I lose, if it's a bad deal, I'm going to get 80% back. So if I win, I might make 200%. If I lose, I'll still get back 20. I win one, I lose one. That's still positive 60, 70%. I'll take that, right? A return with 2 investments over the course of a year, you average 70%. But 2015, it went down. 2016, it went up. 2020, it went up because of COVID. Now it's down to almost record lows to 20%. So now, if I invest in a company and it goes down, I get 20% of my money like invested in that stock. And who's going to do that? These large companies are not. In KKR, their stock, what shows it? Well, look, it hit a spike November 21, like everything else in the market, right? We're going down, down, baby. Yo, straight out of rank. Down by basically 50%. S&P from top to bottom was down by 35%, but NASDAQ down by 40%. So this did worse than the NASDAQ. Now it is creeping back up. It is growing. Since the bottom is up 50%. So you lose 50%, you made 50%. That means you made half your money back. If I got $100, it goes to 50. I make half of that. Now it's $75. So I'm halfway there. Not there yet. I'm halfway. Like running a marathon from Marathon, Greece to Athens, 26.3 miles, 13 miles down, another 13 miles to go. It happened, hopefully. But it just shows that this is an area as investors we might want to stay away from. Even though it's going back up because the market's going back up, if they're having trouble making money, they're not going to lend as much. So as investors, these lending companies we might want to stay away from. This might, in my humble opinion. You do what you want to do. The Certified Financial Planner, I help my clients. You guys on YouTube, up to you. But when it comes to getting loans from companies, you might want to stay away because these larger companies do fund the smaller companies that do hard money lending, that does lending. And if those companies go under, you got to pay back that loan, or you're going to be kicked around to another servicer of the loan. It's just messed up. Or you increase the debt, you want to get a loan to pay off the debt, and they won't let you get that debt to pay off the other debt you have. It's like robbing Peter to pay Paul, and we don't want to do that. But my profiteers, hopefully that kind of gives us an insight of what large private lending is doing, how it helps us from a public side, and why I would recommend we definitely keep more cash in our pockets, stay away from lending right now, because that sector from a large scale is going through some turmoil, and it's going to trickle down to the everyday folks like me and you. Anyways, you guys know love is love here in Atlanta in InvestFest. Hopefully we're going to have a great time. Soon some networking. We got VIP night coming up, so let's see what happens. As always, the relaxed investor saying, let's make some painful profits together, y'all. Peace.
And you just wanna get paid, tired of making the money mistakes. Make a payment on your bills and you still late, yeah. Pay for profits to help you seek change, and you just wanna get paid, yeah. Tired of making no money mistakes. Make a payment on your bills and you still late, pay for profits to help you seek change, yeah. Cut the show and just listen. You wanna feel empowered by making money decisions. Residual by the hours can get you a better living. Been check to check, you know, and it could be different, you know.